Aaron Todrin here, Second Wind Consultants. We're at the 2019 TMA Distressed Investors Conference. I'm here with John Lammert of Assessment Technologies. John, how are you?
Good, good.
The tax world in a distressed environment is hairy, to say the least.
It is. Well, what you typically have, you have a situation where sometimes the property tax world is kind of left alone. People are focused on bigger issues in their case, and people don't pay attention to it. In many cases, taxes are paid. Tax offices are secured or priority creditors, and they get paid without any kind of review. So they think they owe the money, they pay the money.
So are your tax strategies best suited for situations of restructuring and recovery or liquidation and insolvency?
It works in both cases. It's an asset-based, property tax is an asset valuation-based tax. So if there's a distress, there's a problem with the company, the assets obviously are affected as well, and we have to come in and help assist them. Companies, tax offices are looking for their money, but obviously companies in distress are looking to save their money.
Absolutely. So when a company owes several parties money, the debt schedule includes 3, 4, 5, 6 different lien holders. The taxing authorities get involved. Do you get involved in that kind of battle?
Yes, absolutely. Well, actually, the tax offices are probably ahead of the lien holders.
Oh, yeah.
And they file their liens, they secure their rights, and they've gotten smarter at how to collect. And in many cases, they'll assert their rights even before the tax is due, or is even known.
How frequently do the battle for position, the lobbying for position on those tax dollars costs more money than the available funds in the first place?
Well, it just depends. Obviously, when we get into a case, there's obviously enough tax that the cost of pursuit, I think is what you're asking, it's warranted. In many cases, our firm will take on that cost of pursuit, in lieu of some contingency fees. We typically work on a contingency fee arrangement, which is very favorable in many cases because it's just not another expense. We don't get paid until we generate savings for our clients.
Absolutely. Do you view bankruptcy as a viable option for preservation of distressed businesses? Chapter 11. Do you see success in Chapter 11, or do you see more failures?
We've seen it both ways. We've worked the last 3 or 4 cases. The company's reorganized. Some cases, the credit bid, the banks took over the company. But we see bankruptcy as a place that they can go to and clean up their debt structure, and it's also an environment where we can do our work.
Right.
The bankruptcy code allows us, that gives the judge discretion to determine a tax.
Yeah, that's funny that you say that. Chapter 11 bankruptcies fail 75% of the time. That was the 2017 numbers. I don't know what the 2018 numbers are. But I think, as I'm sitting here talking to you, I realize that tax is the one thing that benefits from almost always in the bankruptcy code because they get protected.
Right.
That's great.
Right. So when they come out, obviously they're looking for their money even then, the tax offices. So it's a battle. I mean, and again, it's a market-based tax. So you have to get your ducks in a row. And in many cases, like I said, the opportunities are there, especially in a distressed environment.
Absolutely. Well, there's a lot at stake in the world of distressed business. Behind all the investing and the flow of money, there's people there, there's jobs, there's homes, there's a lot of important stuff that is the fiber of this country. And I'm glad to talk to you and hear how you play a role in that.
You bet. Thank you very much. Appreciate it.
Thanks, John.
You bet. Thank you.